Well, not new ideas. They met multiple investors in their US roadshow, and what they're understanding from this is that the interest for India continues to remain on the elevated level. They're saying that the emerging market funds have a 10-year low relative weightage on India currently, and they're expecting FPI flows to come back to India in the second half of this calendar year. And this will be on the back of as government policies clearly come out post the budget. That is what they're saying. Apart from that, they're also saying that a potential US Fed rate cut later in the year could also be a big trigger for the FPI flows in the country. Now, when they are speaking to these investors, they're also understanding that the willingness of these investors to explore in new ideas has increased, and they are looking to invest more in real estate, infra, capital goods, PSUs now, and discretionary consumption play, unlike the earlier their bets on large banks, IT and consumption only. They're also saying that FPIs seem more keen to invest in consumption-driven capex themes such as residential real estate, airports, hotels, malls, etc. And they're also seeing a good appetite for these investors in small and mid-cap space as well. And one more thing that they have mentioned in their strategy report is the fact that FPIs continue to see some challenge when it comes to in the registration process, and hence they are looking to also invest more towards areas, and that could in fact, as per Jeffries, benefit HDFC Bank and ICICI Bank.
By the way, in a week's time, this is the second note. Rhythm also at the start of the conference is making a case that second half of the year FPIs may come back. This is the second note. They've met what, 40-50 investors in
50,
the US?
50 plus.
Yeah. Even Ashish Chauhan was mentioning that in the second half of the year, because he also does a lot of massive global traveling, and that there is an interest for India and it is emerging as an asset class of its own. It will be interesting to see when FPIs come back, whether DIs will sell or it will be a seller scarcity, both will be buyers. Then the real bubble-like, valuation scene will actually turn up.
It's the force of buying which matters more. So I think FIIs and FPIs, they are known to have that force of buying that pushes up the stock
big
prices.
liquidity surge. Let's see.
So FIIs may well replace DIIs and we will continue to move up.
Yeah, that's what.
Yeah.